All right, Ontario homeowners, if you got a mortgage, I need your full attention because here's a stat that should stop you mid-scroll. 60% of Canadian mortgages are up for renewal in 2025 and 2026. Yes, 60. That's not a typo and it's not fear-mongering. It's straight from the Bank of Canada. This is the biggest mortgage renewal wave in Canadian history. We are talking about a tsunami of payment shocks, confusion, frustration, and hopefully better planning. Now, I know what you're thinking. Cool stats, but why should I care? Well, let me ask you this. Did you lock in your sweet 1.79 rate back in 2020 or 2021? Because that rate is going bye-bye and your new rate is probably going to be more than double. Let's break it down, but make it digestible. Let's rewind. 2021 wasn't just the year we all wore sweatpants for 365 days straight. It was also Canada's busiest mortgage year ever. Why? Because interest rates were stupidly low, like historically, once in a lifetime low. People weren't just buying homes, they were refinancing, breaking mortgages, chasing that sweet 1.79 5-year fix like it was PlayStation 5 restock during lockdown. And here's the kicker. Those weren't small mortgages. Oh no. People bought at record high home prices, especially in Ontario and BC, meaning those 1.79 mortgages were attached to some of the biggest home loans we have ever seen. So what happens in 2025 and 2026? Well, the bill comes due. You are going from 1.79 to something like 4.29 or 4.49, maybe higher, depending on the lender. That's not just a number shift, that's potentially a 15 to 20% increase in your monthly payments. Imagine paying $2,500 a month and then suddenly it's $3,500. That's groceries, that's daycare, that's vacation fund, all gone in a renewal letter. Now, before we all grab pitchforks and storm the Bank of Canada, let's add some perspective. Yes, renewals will sting for many, but not everyone is getting clobbered. Let's say if you had a variable rate mortgage, good news, rates have been dropping. You might actually see your payment go down by 5 to 7%. And 2/3 of mortgage holders won't see a huge jump at renewals. Some will even have the chance to refinance into better terms. And according to majority of the lenders, 76% of Canadian mortgages will be renewed by the end of 2026. But that doesn't mean we are heading for a foreclosure frenzy. The data shows most Canadians will adapt. They will negotiate, they'll shop around, they'll make it work, even if it hurts a bit. Still, that leaves a good chunk of Canadians, especially folks who bought in 2021, with some serious budgeting to do. Let me walk you through 3 typical renewal scenarios in 2025. The first one is the pandemic purchaser, the 5-year fixed at 1.75, 1.79, whatever you want to call it. They bought during the market peak in 2021. Congrats! You locked in history's lowest rate, but also one of the highest home prices. Your mortgage balance is big. Your new rate is probably more than double. And unless your salary is double too, you're feeling the squeeze. Expect a 15 to 20% jump in your monthly payments. The second one is the variable victory. You roll in the dice with a variable rate. At first it hurt. When the rates jump, your payment ballooned, but now rates have started to ease. You could actually see a small decrease in renewal. Nothing crazy, maybe 5 to 7%, but in this market, that's a win. The third one are the mixed bag, the fixed payment variable. You have been paying the same amount each month, but most of that has been going to interest. Now it's renewal time, and surprise, surprise, your real cost is jumping by 30 to 40%. This group is sneaky. It feels like nothing's changed until the renewal shock hits like a rogue wave. Let's localize it. If you are in GTA or Southern Ontario and bought in 2021, your mortgage might be $600,000 or more. And here's a rough comparison. 2021 payment at 1.79 is roughly equal to $2,400 per month. And the 2025 renewal at 4.49, let's call it, it will be around $3,000 per month. That's $600 more each month. And that's not including property tax, hikes, increased insurance, utilities, groceries. Don't even get me started on the cheese prices and car payments. This is why families are cutting back, canceling vacations, moving in with parents, selling the second cars, or just straight up listing the house. Every time rates go up, the TikTok experts scream, foreclosure crisis incoming. But here's the thing, during the pandemic rate spike, when variable rates were from 1.4 to 5.7, most people still managed to hang on. Yes, it was painful. Yes, some people dipped into savings. Yes, a few folks sold and downsized, but the system didn't collapse. Most Canadians found a way. So, will this wave lead to mass foreclosures? Highly unlikely. Will it hurt? Yep. Will some homeowners sell? For sure. But a full-blown crash, don't bet on it. We established that this isn't a dream, but it's not a disaster either. Here's what smart homeowners are doing right now. Start early. Don't wait for your renewal letter. If your mortgage is up in 6 to 12 months, get your paperwork ready and rate shop today. Negotiate. Lenders want to keep you. Use that. Get quotes from brokers. Don't just auto-renew with your current bank. Extend that amortization. I know it's not ideal for long term, but spreading your payments over 30 to 40 years can ease the month-to-month burden. Next, consider going variable. If the rates are expected to fall, this could save you money if you can stomach the swing. Use your equity smartly. Need a cash flow relief? Get a HELOC or refinance, but only if you have income to support it. Talk to a pro. Don't wing it. Even at 0.25% difference in your rate, you can save thousands. Look, this mortgage renewal wave isn't something to ignore, but it's not a reason to panic either. If you are an Ontario homeowner, especially if you bought in 2020 or 2021, this is your heads up. Your renewal could mean a $500 to $800 increase in your monthly payments. But knowledge is power. The earlier you plan, the better your outcome is. And if you're feeling overwhelmed, you're not alone. Thousands of Canadians are in the same boat, and most of them will get through it just fine. If you want to run the numbers, compare your options, or just talk it out, no pressure, no pitch, my team is here. Seriously, we are here to help you surf this wave, not drown in it. Drop a comment, shoot me a DM, or book a quick call. Let's take the fear out of your renewal. And hey, if this video helped you, share it with your friend who might need a help in renewal soon, because 60% of us are riding this wave together. Let's make sure we all land on our feet. See you in the next one.